If I take a look here at ETH-BTC real quick, so this is a daily, and what I want to do is I want to go ahead and bring this into frame here. So this level right here, I'm watching this closely to see, when Ethereum breaks out against BTC, because I think that the breakout here will signal the beginning, the start of the next leg up for ETH in Bitcoin terms. So, my faith has not been shaken. I still believe that there will be some sort of alt season this year, which means that it's got to happen over the next like 60 days. So it's go time. And I think that one of the best indicators to watch is ETH-BTC. When ETH, or if, I should say if, but I really do think that it's a when or if ETH breaks out in Bitcoin terms, I think that that's the signal that, hey, you know what, ETH is going to start to rip higher and it will pull all altcoins up with it. So this is something that I'm watching closely. Now let's take a look at, why don't we take a look at the Russell? Just go down the list here. So these are small caps. And, this is something that Yuri has been pointing out a lot recently for good reason. Because when the Russell really starts to outperform, it's usually because, rates are coming down. These Russell 2000 stocks, these are referred to as like the Main Street stocks in the United States. They're much more interest rate sensitive, similar to digital assets, a little bit more interest rate sensitive. So when you see the Russell ripping higher and, just a couple of days ago put in some fresh all-time highs here, really nice V-shaped reversal pattern there. So if the Russell continues pushing higher, that probably means that Bitcoin and digital assets, also continue to push to the upside. So this is constructive. Taking a look at bonds and notes just real quick, these have been, just rallying, which means yields down, which is great. So hopefully we see that yield curve start to steepen and be pulled down. So I think you would call that a bear steepening. But bonds bid a little bit over the last couple of months. Notes, same thing, bid over the last couple of months. If we take a look at yields on the 10-year, here is the 10-year Treasury note yield. And this is interesting because this could be leading DXY. So notice this breakdown. So as yields fall, as yields break down, move lower, I would expect that the dollar would follow yields lower. So this breakdown, this is if I zoom in, you can see it even a little bit more clearly. I'll zoom into an hourly. So after zooming into an hourly here, there we go. Here's the breakdown, just teasing the breakdown, retest, rejected, moving lower. So would like to see yields continue to move lower because I think that that would mean that the dollar, and here's the dollar, I think that that would mean that the dollar moves lower. And since everything that we buy is priced in dollars, if the dollar becomes less valuable, meaning it can purchase fewer goods and services, well, then the price of those goods and services goes up.